Many of you have asked me for an update on Bitmine stock, ticker symbol BMNR. The stock is still going down. It's down 56% over the last year. Absolutely crazy. It's trading right now at 85 cents on the dollar, below liquidation value. Again, it's really crazy to me. So I got asked to talk about it again because a lot of things have happened and have changed since my last video, and I'm going to talk about them here. So I really hope you enjoy it as always. Now, I always get asked about the treasury business model and why I even talked about the treasury companies, because they all seem like a scam and like they seem like they don't work because Bitmine is down, MSTR is down. Well, the reason why I told you guys I like Bitmine better than MSTR is because they were doing the treasury, you could say, business models the right way. And the best way to do it is whenever Bitmine is trading above net asset value, above liquidation value, above the assets in total, they would pretty much issue stock at a premium, and they use the premium above NAV to buy more Ethereum, which would create Ethereum per share. And whenever the stock goes down, they take their cash holdings, or they even sell some Ethereum in this case, for them to buy back the stock at a discount like it is right now to NAV, and they would get about a 15% premium or 15 cents on the dollar, and that would create Ethereum per share worth of value. This is the best way to do it. Just like companies create earnings per share, their job is to create Bitcoin or Ethereum per share. Now, the way MSTR was doing it is they were doing it through a lot of those STRC and all those preferreds, which I was not a big fan of. The company was paying 0.4% on convertibles. It was dilutive, but they were paying 0.4%. Then they switched to paying 10 or 11% on STRC in all of them, which I was not a big fan of for a company that's generating little to no net income. So to me, it just felt like a death spiral, and I avoided MSTR for this reason. Now, unfortunately, Bitmine is following the MSTR book. They launched $300 million in a preferred stock called BMNP, which has a 9.5% annual dividend. And I said, this is a dumb move. I was not a big fan of that at all. And that happened right after my video. The reason why I liked Bitmine is because they had no debt, no kind of obligations to pay up, no loans, nothing. And it just felt more like a clean treasury company where they buy back below NAV and they issue above NAV. It was very simple. They introduced this one called BMNP, which I was not a big fan of. Now, I think there's a few reasons why they did it. The first one is with Bitmine trading below net asset value, they can't really issue stock over here to buy Ethereum because it would be a really dumb move. So in this case, the better move is to probably go with the preferreds. So it's not really the worst idea in the world in this case. Now, if we look at the staking yield on an annualized basis for Bitmine, it's about $246 million at the current price. The preferreds, we talked about them, it's about a 9.5% yield. So if they're generating about 240 million, we assume, let's say 140 million goes to expenses and SG&A and all of that, and they end up with $100 million. Now we take the 300 million and we take out 9.5%, and we put in 9.5%, we get about $28 million a year in obligations on $100 million of maybe net income, or even 90 or 80 million dollars. So this could well cover the preferred yield. It could well cover the dividends that Bitmine is paying. So again, it's not really the worst idea in the world in this case, especially taking into consideration that Ethereum, or I should say Bitmine, is very close to reaching their Ethereum goal. They have 5.7 million Ethereums. Their total goal is 6 million to get to 5%, and they have 555 million of US dollar holdings, and they only need 482 million for them to achieve the 5% goal. So they no longer need to issue more and more of those preferreds because they have everything they need to get to the 5% goal, and then they can use the staking yield for them to do buybacks or increase the dividend or do whatever they want to do. So it's not really a thesis breaker, but I think if Tom Lee issues another 300 million for him to buy back the stock or do something crazy, then you would see that this company is becoming like MSTR. But if he did it just just because the stock is trading below net asset value, then it was actually a smart move. So for me, I'm waiting to see what he plans to do over the next few weeks, months, 2 months. If he issues another prefer to buy back the stock or do something crazy, then for me that would be like a thesis breaker because it would be becoming much riskier, kind of like MSTR. Now the company has issued an increase in their buyback program to about $4 billion, and it makes a lot of sense to be buying back the stock here, well below net asset value. But I still believe Bitmine in general is not a bad investment if you believe in Ethereum, if you believe in mainly the tokenization thesis of Ethereum, which I do, where real estate alone, which could be tokenized in different pieces, and you could buy a piece of certain buildings, it all could be on the Ethereum network. With 288 trillion, fixed income could be tokenized. Stocks are already being tokenized, especially in Europe. You have other things like art and pictures and collectibles and cars and other things that could potentially be tokenized in the future. And the CEO of Robinhood talked about tokenizing rental properties and real estate in a very sophisticated way. So I'm excited to see that. And if you also believe in Mr. Beast's ability to launch new things to a massive audience, he's launching some kind of a financial app that could pretty much dominate a lot of companies, even Robinhood, which I personally own. He has a big audience. People love him. They will likely be signing up for this financial app and any other apps he decides to launch. Bitmine has a $200 million investment, which I believe is 5%, if I'm not mistaken, of the total enterprise value of Beast Industries. So you're getting all of that, and you're also getting it at a discount, 50% discount to net asset value versus buying Ethereum itself. Now, if we look at the Ethereum to Bitcoin ratio, which is what Tom Lee looks at to determine the fair value of Ethereum, it's well below the 8-year average, and it's well below the high. It's pretty much near its historical lows. Now, the way he's valuing it is if it reaches, let's say, the 8-year average, Ethereum would be trading, if Bitcoin is trading, let's say, at 100,000, Ethereum would be at 4,700, and today Ethereum trades at 1,600. So that's almost a triple from here, and on an 8-year average. If it ever gets to its high and Bitcoin goes to like $1 million, which I think is crazy, then Ethereum would be trading at 250,000, and under this assumption, Bitmine would be trading at 5,000. Again, I said that this is crazy before. I would not count on those assumptions. So for me, the way I view Bitmine is as a better proxy than Ethereum to bet on Ethereum, because you're getting a dividend yield, you're getting a 15% discount, you get Beast Industries, you also get an 8 co-investment in the Sam Altman coin that has something to do with some cybersecurity and identification for AI. So it tells you which one is AI and who is not AI in terms of internet posts and other things, which is an important technology. And you're getting all of that at a discount. So I still believe the stock is attractive over here as a bet on Ethereum. But if Tom Lee continues to issue those prefers, then I see it turning into another micro strategy where eventually they're going to have so much in dividend obligations that he's going to be having to sell Ethereum to fund the dividend. And again, or dilute shareholders to fund the dividend, and that's not a good place to be in. So that's my opinion on Bitmine. Hope you enjoyed it. It was not financial advice. If you did enjoy it, please press the like button and maybe consider subscribing. So I'll talk to you in another video.